Most people think that if you want to become a millionaire, you have to make $1 million. But that's not true. In fact, that's the hardest way to become a millionaire, and I'll show you. There are 3 ways that you can become a millionaire. You can earn your way to $1 million a year, you can save your way to $1 million in the bank, or you can own your way to $1 million or more in net worth. This one requires the least effort. Not that it's easy, but it requires the least effort, but the majority of people are focused on these 2. So let's break this down. Let me start by talking about number 1, how do you earn your way to $1 million a year? Statistically speaking, you are least likely to earn your way to $1 million a year. The top 1% of earners make $500,000 a year, and the top 0.1% of earners in the world, not the United States, but the world, are making $1 million a year or more. So if you want to make $1 million a year, you're probably not going to get that from your job unless you become one of the CEOs of a Fortune 500 company, or if you create your own income. This doesn't mean it's impossible, you just have to understand the numbers and then work backwards and then actually make it happen. If you are doing something that makes you $100 per transaction, maybe you're a salesperson, maybe you have your own business, you're selling something, but you're making $100 per transaction. In this case, you're gonna have to sell or make 833 of these transactions a month to make $1 million in a year. If you can make $500 per transaction, now you only have to make 167 of these transactions a month. If you make $1,000 per transaction, now you only have to make 83 of these sales or transactions a month, and if you can make $5,000 per transaction, now you only need 17 of these transactions a month if you want to go from wherever you are now to $1 million a year. Saving your way to $1 million was originally the way that I thought that you had to become a millionaire, but let's do the math to understand what this means. Let's assume that you start working when you're 21 years old and you start making $50,000 a year when you graduate college, and you are going to save 10% of your income, which in this instance will be $5,000. So now you take this $5,000 and you put it in an account, and now your money is going to sit there and accumulate each year that you save money. And let's also assume that you're getting a raise every single year. This way you're actually saving more money each year, and I'm going to assume that your boss is going to give you a guaranteed 5% raise every single year. So that means year 1, you make $50,000. When you're 22, you make $52,500, which means you're also going to save $5,250. Well, if you do this, you will become a millionaire. It's going to take you a lot of time. In this instance, it is going to take you 50 years to become a millionaire. So now you're going to be 71 years old. You're going to make about $560,000 a year when you're 71, assuming you get a 5% raise each and every year. And then when you're 71, you're finally going to have a bank account worth $1 million. It's going to take you 50 years to become a millionaire, but you can do it assuming a few things. 1, you keep saving 10% of your income, and 2, you get a 5% raise, a 5% increase in your savings each and every year. This is where, again, earning more money can be more valuable, but of course you want to be more strategic with your money. Now, how do you earn more money? Well, you can do it from your job, or you can work to create your own income. If you are a business owner, if you are an entrepreneur and you want to stay up to date on the latest business trends, we have a free newsletter for you called Business Briefs, where my team is breaking down the latest in business trends, innovation trends, funding trends. That way you can stay on the cutting edge of what's happening in the entrepreneurship and business space. So if you're an entrepreneur, if you own a business, if you run a business, you can join Business Briefs for free, and I'll put the link to how you can join down in the description below. This brings me to number 3, which is how do you own your way to $1 million? Now, the first thing you might be saying is, but Jaspreet, in the previous example, when you're earning $50,000 a year and you're saving that money, what if instead of you save it, you invested that money? That's one way to own your way to $1 million. But the second way is a little bit different. So let me start by talking about the first one, then I'll go into the second way. In this first scenario, if we start by earning $50,000 a year, you invest 10% of the income, which is $5,000 in year 1, $5,250 in year 2, and on and on and on. Now, when you take this money, this invested money, if you are able to get a 7% return on this money, so you take this $5,000 and you invest it into the market, and let's assume over the long term you get a 7% annual return. Year 2, you invest $5,250, you invest that money, that gets a 7% return. Now, it's not going to take you 50 years to see a $1 million investment account. In this situation, it's going to take you 32 years to see that return on your money. Now, how do you invest this money? Well, you can put this money into index funds that give you exposure to the total stock market. You can invest in index funds that give you exposure to the S&P 500. You can invest in ETFs that give you exposure to the S&P 500 or the total stock market. I've talked about this on multiple videos on my channel. I'll link some for you down in the description as well if you want to learn more about those. But the key here is when you're putting your money aside, it's not just sitting there, it's going to be growing. And historically, we have seen the stock market grow by 7 to 10% a year on average. That doesn't mean it always goes up by 7 to 10% a year. That means on average, after you factor in the market crashes and the booms, it grows by around 7% a year. And the reason why so many people lose money in the market isn't because the stock market doesn't go up, it's because they don't know how to invest their money in the stock market. And one of the ways you can bypass that learning curve is you can just put your money into the market by investing in funds that give you total exposure to the stock market or something like the S&P 500. That way you don't have to worry about it. So this is one way that you can own your way to $1 million. But now if you want to be more involved, option number 2 when it comes to owning it is to actually buy it or create it. So one way that rich people or wealthy people can make $1 million is you buy something, let's just say a business or a piece of real estate for $1 million. You do something to increase the valuation of it. Maybe you work to increase the rents. Maybe you work to increase the profitability. And then you sell this business for $2 million. When you're talking about these big dollar figures, it's not that hard to see people sell a business or a piece of real estate for a lot more than what they bought it for. And when you buy it for $1 million or $10 million or $20 million, $1 million gain really isn't that big deal. Now, you might hear that and say, but Jaspreet, how in the world am I going to go do that because I don't have $1 million to start with? I'm not rich yet. I'm not wealthy yet. I don't have the ability to go out and buy $1 million business yet. So what do? Well, if you can't go out and buy $1 million business, you're already doing that option here, right? When you invest your money, you're working to grow that money. Option number 2 is you can create $1 million business. Now, creating $1 million business, believe it or not, is easier than earning $1 million a year because for you to build $1 million business, you can earn less than $1 million a year. I'll show you. Many small businesses in America can be sold for 5 to 10 times earnings or EBITDA. Now, some businesses will be sold at a lower multiple, some will be sold at a higher multiple, but in a general range, you'll see many businesses in America sell between 5 to 10 times earnings. That means if your business makes a profit, you can take that profit number, multiply it by a multiple, and that can be what your business is worth. Now, there are a lot of stipulations for this because when people buy a business, they want it to be scalable. They don't want it to rely on you because if the business relies on you as a person to be there, then the business really isn't worth that much because if you died or if you stopped working there, the business will go down to zero. So this has to be a real business that you can build or that you can scale in a way that you can move away from the business. This doesn't mean it's impossible or that it's harder. It just means that you have to think a little bit differently and build the business processes a little bit differently. But now let's go through the numbers. If now you run a business that makes $100,000 a year in revenue, then you take off your expenses, which let's assume are $50,000. That leaves you with $50,000 of earnings or profit. Now you can take this $50,000, multiply it by 5, which would be $250,000, or multiply it by 10, which would be $500,000. And now this gives you a general range of what your business might be worth if you sold it. Your business in this case might be worth $250,000 to $500,000 if you sold the business, even though you're only making $50,000 worth of profit or $100,000 of revenue. So now, if you want to build $1 million business, let's do the numbers. We can work backwards now. At a 10 times multiple, that means your business has to have earnings of $100,000 to be worth $1 million because $100,000 times 10 is $1 million. And at a 5 times multiple, that means your business has to net $200,000 of earnings, EBITDA, profit, whatever you want to call it. Multiply this by 5, now this is worth $1 million. Now, you can work even more backwards. If this is the profit that you have to have, now you have to take the revenue minus the expenses, which has to equal this number. How much revenue do you need to make $100,000 or $200,000 a year? Maybe it's $200,000 of revenue in this number. Maybe it's $500,000. Maybe it's $1 million worth of revenue, depending on what the business does. But now, at least you have a clear target of what type of numbers you need in your business. That way now you can scale the revenue, you can manage the expenses, and have a profit multiply the profit by multiple, and now you have this $1 million business. Now, when you have this $1 million business, you have the option to do three things. Number one is you continue operating the business and you have the salary and you retain the ownership. You own a $1 million business. Option number two is you can sell the business. Now, another buyer can come in, they'll buy your business for $1 million or whatever it's worth, and now you get your $1 million, and now you can go and stay on a beach or do whatever it is that you want to do. Or option number three is you can take a loan out against your business. Now, of course, this has risks associated with it. And so if you do this, you want to make sure you do it smartly. But now what you're doing is you have a business that's worth $1 million. And you go to the bank and you say, hey, bank, I have this business that's worth $1 million because I have this much earnings. And so I think I'm worth $1 million. I want to take a loan out against my business. It's kind of like taking a loan out against a property that you own that's worth $1 million. Now, it's kind of like a cash out refinance. So you want to be very smart here because you definitely do not want to choke your business because of debt that you're taking out for your personal life. So again, I'm going to very much caution you here if you do this, that there's a lot of risk associated with it. But now you can go to the bank and say, you know what? I want to take out a $300,000 loan. Now, you take out this $300,000 loan tax-free because a loan, a cash out refinance, isn't income. So this $300,000 now comes into your pocket. You can spend this money however you want. Now you have the $300,000 that you can use to live your life, and you're going to pay this $300,000 back from the income from your business. Now, ideally, you're going to continue to work to grow this business. That way now this is going to go from $1 million to $2 million valuation, more incomes, more profits, more money to pay down the debt. But now you have this money while you still own the business, and you can spend this money tax-free. This is what you see Elon Musk do. He's made this very popular because he talked about how he didn't receive a salary when he was running Tesla. But this is where now once you build the business, you have a lot of opportunities of what you want to do with the business. But the whole idea here is if you want to make $1 million or be a millionaire, you don't have to go out and necessarily just earn that money. You don't have to necessarily save that money. You can own your way there. Obviously, if you don't want to build a business, you can do that by investing your money, invest it into stocks, invest it into real estate. There's a lot of different ways to do that. I have other videos on my channel where I talk about that. Or you can build a business that's worth $1 million. When you own a business that's worth $1 million, you can sell it for $1 million. You can just own it and own $1 million company. Or you can refinance out against it and then take out some cash against your business and then use that cash to live off of. But that does come with the most risk. Bro, Jaspreet, I've been working for the last 15 years. I've been working to grow my career. I make okay money. I have some nice stuff, but I have nothing in the bank. I have no investments. I have no wealth. What do I do? So this video is going to be dedicated to answering that question. How do you get started to build your wealth? Because from now on, when I get these